The $1 exchange rate fell to below 1,021 for the first time in nearly 6 years. Exporters have suffered greatly from the rapid appreciation of the won. Some even say that the Korean currency may fall to the 900 level against the greenback. What is the best way for the Korean economy to deal with the rapid appreciation? According to the report released by the Bank of Korea on June 10th, household debt has reached over $684 billion, the highest it's ever been. This has also had a negative impact on the domestic market. The Korean government is about to announce its economic policy for the second half of this year, and it will include a strategy to activate the domestic market and deal with the expected risk factors. Is the Korean economy facing a crisis, or is it a groundless concern? We discuss the outlook for the Korean economy in the second half of this year.
Thanks for tuning in and welcome to this week's edition of Upfront. I'm Na Hyun-kyung.
I'm Yoo Jong-soo.
Now today we will be discussing various aspects of the Korean economy, and joining us is the president of the Korea Economic Research Institute, Ambassador Kwon Tae-shin. Thank you for being here.
Thank you very much for your invitation.
And Mr. James Rooney, the chairman of Advanced Capital Partners. Thank you very much for being here today.
Good to be with you.
Some have raised concerns that the Korean economy is facing a crisis. Would you agree, or is this a groundless concern?
I think I cannot say crisis, but as you pointed out, we are now in the critical and crucial period because structurally we have a lot of problems. Our potential growth rate is decreasing. 20 years ago, 10%. These days, 4%. And in some years, it will go down to even 3%. And also, Korea is the world's fastest aging society, and then world highest lowest fertility rate, and excessive household debt, and then high youth unemployment. Structurally, we have that problem.
Okay.
And then cyclically, we should have come fast from trough. But looking at this graph, comparing with other third to eighth cycles, it went up after 5 years. It went up to 132 compared with the bottom. But this time only 117, much lower than former cycle comeback.
I see.
So cyclically we have problem, and structurally we have problem.
Okay.
Very difficult time.
Okay. We can hear more about your later part of the program. So what do you think?
Well, I agree that we're in a world full of challenges. But you know, the key thing when you're surrounded by challenges is to discover the opportunities that they represent. I hope that's what we'll start to identify today.
And would you also say that economists are maybe overreacting in this case then?
I think economists are paid to be miserable.
No.
Whereas I think entrepreneurs and the people in the street need to continually look for opportunities and use those opportunities to overcome the difficult reality that is around us with all of these challenges. And they're not just Korean challenges. They're challenges around the world, different countries changing at different times.
But at the same time right now, at this point, how do you think the Korean economy is doing then?
I agree with Minister Kwon that the Korean economy has been underperforming for at least the last 10 years, maybe 15 years since the IMF financial crisis that we suffered and recovered from very well through 2003. Korea is an energetic economy. It is an energetic people. And I think we're underperforming our own potential currently because we're not active enough in reaching out to new opportunities.
And we will talk about those opportunities in a moment. Ambassador Kwon, how do you think the Korean economy fared then for the first half of this year, or up to May at least?
Yeah, but before going into my answer, I'm agree with James that the crisis is an opportunity.
Of course, we all agree with that.
Because our aim is so high, that is the reason why we are a little bit disappointed. And then even though our economy is coming back, but this year our
So that's the first quarter of this year.
Quarter on quarter, less than 1%, first quarter, second quarter. But year on year, 3.9% growth rate. But it is coming from base effect because last year first quarter
was very
low. And that means that we are slow in investment, and also consumption recovery is also very slow. And then to make things worse, we had several disasters.
Very disaster.
And also last year we had a political election. And then after that, we have discussed the economic democratization, which gives a lot of burden to companies, industries to make new investment.
I would imagine there are many answers to this question. What do you think will become the biggest variable for the Korean economy in the near future?
I think the key bottom line should be to make Korea a better place to do business-friendly environment. In that sense, we have a lot of hurdles, very rigid and militant labor unions and labor market is a big issue. And then we have a lot of overly regulation in many areas. So those things should be cleared to make our companies to invest more. I think James agrees with me.
Would you?
I think in addition to what Ambassador Kwon mentioned, we need to recognize that Korea still cuts itself off from the world too much in terms of capital flows. Our borders are not yet open and liberal to capital flows in the way that you see in other countries. And we also have a foreign exchange rate policy that I think could be managed quite differently. But if I were to answer the question, what's the single most critical thing that I care about for the future dynamic Korean economy, it's actually education. Education of our young people, retraining of older generations, getting people back into the workforce with new skills, because the growth rates of the past, 8% per annum for 40 years, meant that a lot of people who are in their 40s and 50s today grew up in a Korea that was very, very different. They got an education that was suited for the times back then, but is not necessarily suited for the times today. And we can do something about that, but it needs action. Action by the government, action by companies, action, social action, to give our workers new skills for today and the skills that are needed for the future. That's part of the reason why we actually have too many people unemployed, especially in the older generations. But even young people coming out of college are not coming out equipped with the skills that they really need to join the workforce in the most productive way. And it's very disappointing for them that the education system hasn't supported them to prepare them well for the work environment of today.
In macroeconomic sense, the biggest component of economic growth comes from investment, consumption, and export. But investment, the first quarter this year, lower than the same period last year, minus 1.4% lower than last year. So investment is not picking up. It's coming from the reason which I just described before. And another issue is the consumption. The problem that our average propensity to consume is gradually lowered. It's coming from excessive housing debt and then aging society. So people need to prepare for the future. So they save money and they pay back their
After
loans.
retirement.
So investment is not good. Consumption is not coming back. The only thing we depend upon is export. But these days, as James pointed out, the speed of Korean won appreciation looks very difficult for many Korean companies. according to Korea Economic Research Institute, KERI model, if our won and they're strengthened to $1, 1,000 won, then our growth rate will be reduced 0.2 percentage point. So a very sharp appreciation of Korean won is the highest issue at this moment.
On that note, do you think the Korean government should be more aggressive in intervening in the foreign exchange market or no?
If I tell you the size of Korean foreign exchange daily market is only $48 billion interbank, whilst the debt of London, $2.7 trillion. So Korean market is only 1/70th. And then our capital market is completely opened, mostly. And then we have in Eastern Asian countries, only Japan and Korea, fully fluctuating exchange rate. So Korea can be a good target for speculation. So that is our biggest concern. But we know that Korea should be strengthened, but the problem is the speed.
So in the long term, it's not a problem that it's appreciating, but it's the rate at which we will get to later, of course.
Yes, yes.
And Mr. Rooney, do you also believe the Korean government, I mean, you did mention slightly ago that the foreign exchange policy is a bit off.
Let me be very blunt, if I might. The IMF crisis of 1998 largely occurred because the won became too strong. And in my view today, we continue to aspire to having a won that is too strong. If I compare other currencies in the neighborhood, the Chinese renminbi, the Hong Kong dollar, and even far afield like the Saudi Arabian currency, the Dubai currency, and so forth, these are actually managed against the US dollar on a relatively fixed basis. And it's always puzzled me that Korea feels obliged to let its currency move around at the will of the market, especially when, as Minister Kwon says, we have a very thin foreign exchange market. The trading is very small, and the real burden of the currency fluctuations, and it's not just the trend of it, it's not just the direction, is the one strengthening or is it weakening, it's the way that it jumps around all the time,
The way it
is very
fluctuates.
destructive to especially small and medium companies, but to all businesses in Korea. How can you plan your business out over the next 12 months or the next few years? How can you make good decisions if you don't know what the currency is going to be, or you're frightened that it's going to be stronger in the future than today? You start to move your production offshore to other countries, especially to countries where you don't have that effect. You know, production in China is relatively immune to currency fluctuation because the renminbi is relatively stabilized against the dollar. It doesn't move dramatically. If it moves, it's on a slow trend, a gradual trend. Of course, this is not just Korea's problem, it's a problem around the world, the strengths and weaknesses of currencies, the fluctuations of them and so forth. But other areas like the euro are better equipped, even the British pound, better equipped to manage this because they have deep markets for foreign exchange trading. They have sophisticated instruments that allow the participants to hedge. We barely have those kinds of mechanisms. But I think that, in my humble opinion, having been in Korea for the last 18 years, Korea now has very deep foreign exchange reserves. It has the capacity to manage well its foreign currency, to keep the level relatively stable. The challenge, of course, is what should that level be? Personally, I think it's too strong today. At 1,100 to the dollar, I think it was a fair position in the last couple of years. At 1,000 to the dollar, yeah, you're going to start seeing cracks in the industrial base driven by that challenge.
Right. All right, so some may agree and some may not agree, but let's get a second or third opinion to be exact here. Why don't we talk to Professor Son Sung-won? He's the former senior economist on the President's Council of Economic Advisors at the White House. So, sir, why is the Korean government stepping in, and is that really necessary?
Economists believe that the government really should not intervene at all. The market forces, the supply and the demand for a currency should determine the value. But that obviously has not been the case. the United States has engaged in quantitative easing, essentially increasing the supply of the dollar, and therefore the value of the dollar has been depreciating. The Japanese government has done in a massive way. So to some extent, governments have been intervening in the foreign exchange markets, and this is one of the reasons why the Korean government felt that it had to respond.
Amid the continuing appreciation of the won, the value of Japanese yen and the Chinese yuan have fallen, which might bring about a negative impact on the Korean economy. What is your take on this?
That is very important. The Korean economy is a very export-dependent economy. As the Korean won appreciates, that hurts Korean exports overseas. For example, about 24-25% of Korean exports go to China, another 15% to the United States. And the stronger won will hurt Korean exports, therefore, job opportunities in Korea, especially for small to medium-sized companies.
So the job market, of course, will be affected. Now, sir, you've mentioned that the won may strengthen past 991 against the greenback. What are your reasons?
Well, what I said was if the current trend were to continue, and let me explain what these current trends are. First of all, most people are expecting the Korean economy to strengthen in 2014 compared to 2013. So that's one of the reasons economy is hopefully is doing better and will do better. As a result, also, some people believe that the Bank of Korea will start raising the interest rate later this year. In a situation like this, when businesses are expecting the dollar to weaken and the Korean won to stay strong, as soon as they acquire the dollar, they try to sell it or keep the Korean won, and that accelerates the trend. So when you combine the economic trends and the possibility that the Bank of Korea could raise the interest rates because of the fear of inflation, and businesses trying to sell the dollar, get rid of them before the value goes down even lower. When you combine all these things, it is quite possible that we could see 991 to a dollar. Again, the key word is if these current trends were to continue.
All right, we will keep that in mind. Thanks for your analysis today. That was Professor Son Sang-won at California State University.
Ambassador Kwon, as Professor Son mentioned, other foreign financial institutions have said that the exchange rate will fall to level of 901 per dollar. Do you agree with this outlook?
No, I don't think so. I don't think so. You know that U.S. Treasury made our foreign exchange market report last year, but their base year was 2007, just before world financial crisis, when Korean was overly valued, 929. So with that base year, they are saying Korea won is undervalued. But we think as James pointed out, we think our equilibrium exchange rate is somewhere around 1100. But the exchange rate should be decided in the market by supply and demand. But what we worry is that the speed is too fast. Now Korea won is highly overvalued in 6 years. $1 is 1,020, less
Around
than 1,020.
1,021.
And the biggest issue is 100 yen is 1,001 level. So the yen, we don't have direct market. It should be arbitrage rate because we have market for dollars. And then we quote dollar yen. So, but as James pointed out, in 1996 and 7 and 2007, comparing with yen, Japanese yen, Korean won is overvalued. Then crisis came because about maybe 50% of our export competing with Japan, and Korea is very much dependent upon export. So it is not acceptable by Korean companies.
The fluctuation of the won from month to month, from day to day, and even from year to year is generally driven by cash flows, liquidity in the market, money flowing in and out of the capital markets, particularly the stock market and so forth, and the maturity of bonds or the arrival of funds to pay for ships that have been ordered, this kind of thing, and very rarely has anything to do with the fundamental strength of the economy. Is Korea a good place or a bad place? That hasn't changed in the last 5 years, frankly. Korea's been a very stable economy, a very safe place to do business, and so why has the currency moved in one direction or another? The arrival of a lot of cash into the Korean stock market, if investors start to feel that it's a good opportunity to invest, has the side effect, and it's truly just a side effect of changing the exchange rate, because there's more demand for won than there is for for dollars to match it. The Korean government has a large pool of US dollars available to it through its foreign currency reserves, which can allow you to mitigate that. Let me give you an example. Imagine that we're in the market and we want to buy oranges, right? If we go to the market and there's a lot of oranges available, then the fact that we're buying oranges doesn't change the price of them. But now go to another market where there's only very few oranges. We come along to buy 3 oranges out of 6 that are available. People see us buying those oranges and they come and decide, oh, there's only a few oranges left, we better buy some too. And suddenly there becomes a bidding war and the price of oranges goes up because there's not very many of them. That seems to me to be, it doesn't change the value of an orange. It's simply a problem of lack of supply. Korea has the capability to ensure there's always a deep and liquid market for dollars or other currencies. But first of all, we only essentially exchange the Korean won into US dollars. That's a huge weakness of our lack of convertibility of the Korean won. And secondly, we don't release enough liquidity. We don't put enough oranges in the marketplace to make sure that the price doesn't fluctuate unnecessarily. And unnecessarily means month to month, because economic fundamentals don't change within a year, right? Unless you have an absolute crisis driven by something very deep. The economic conditions of Korea are the same today as they were a year ago. We talked earlier about ferry disaster and other temporal factors. Those have a short-term effect, they have an emotional effect, they have some spending effects. But at heart, the Korean economy is much more than that superficial emotions, which are just like waves rippling on the ocean.
Theoretically speaking, foreign exchange rate reflect the real purchasing power of each currency. But it looks very simple, but in reality it is very difficult.
It's very complicated.
And that is the reason why we used to have a fixed exchange rate. But the economy is not stand still, it is changing every year. And then the competitiveness is changing every year. So once they want to adjust it, then big shock happens in exchange rate from 800 won to 1,000 won. Then it is big shock to everybody. And that is the reason why I moved to floating exchange rate. But even in floating exchange rate, it doesn't reflect the real purchasing power parity issue because of speculation, because of supply and demand. And in that sense, Greece and Germany using the same euro. But the real purchasing power or economic competitiveness of each country is different. So as a result, Greece was using overvalued euro. That means that it is easy for them to borrow money and everything is cheap, import. As a result, they have a crisis. So that is the issue of exchange rate issue. And why Korean won is strong. Korean won, as James pointed out, very small country, affected by worldwide economic issues. U.S., in the first time in the world, in the monetary economic theory, they never used such a theory, QE, quantitative ease policy. Huge supply of dollar makes dollar weak. And also, even in Japan, they admit Abenomics, printing out Japanese yen. Yen go down, dollar go down, euro, ECB doing the same thing. As a result, the Korea won is linked to dollar only. So while every currency going down, Korea won becomes strong. So it is too overvalued by other
currencies.
Then we go back forward. Then the somewhat it is coming from supply and demand, because for the 27 consecutive months we have shown current account surplus, so huge inflow of dollars. And this year, just 2 months from early May, $3 billion came to Korea to buy Korean stocks, and within this year, $12 billion came in to buy Korean bonds. So overly supply of the dollar and our strong economy. And to make things worse, worldwide devaluation. That makes Korea is a good target for speculation.
Haven't Korean companies actually been past that point where they've known the situation, they know the currency is going to fluctuate, so they have the brand power to actually overcome that obstacle, for example, like Samsung and Hyundai?
So let's have a look at several cases. The big companies that have built strong brands, that have built more robust profits, have been able to withstand this somewhat better. They've also had the sophistication to be able to hedge some of these currency fluctuations if they were careful. You can hedge in the wrong direction and it can hurt you, which has happened as well. There aren't very many hedging instruments available to Korean companies, and it's sometimes dangerous to use the ones that are available, which occurred over the last decade. But to put it simply, let's say the big companies have stronger brands, bigger profits, and more sophistication to manage their exposure. But they do part of that by moving jobs overseas, by moving them to other countries where the labor cost may be low or where the currency fluctuation is mitigated, moving them to areas that would have common currency with the markets that they're trying to sell in. So that's also not really helping. The problem is when they come under pressure, they pass that pressure down the line to the small and medium enterprises that are supplying them with a lot of their component parts. They may have designed the product, they may assemble the product, but they often don't make the actual components for it. Smaller companies do that on an outsourced basis. Those smaller companies at the beginning of the story already have relatively slim profits because they're not selling on a brand, they're not capturing any kind of monopoly market share or anything like that. When the currency comes, it wipes them out, wipes out their profits. And I could show you cases, even listed companies in Korea stock market where that happens. So it's a distraction to think that the chaebol represent the entire economy of Korea. They are only about 10% of all profits, of all economic activity in Korea, and an even smaller part of all employment. The real companies that support any economy, not just Korea, 85% of all jobs come from small and medium enterprises. 85% of wages, therefore, come from that area, as do profits. When you hurt them, you immediately subtract GDP out of the economy.
Let's go back to the foreign exchange market. I mean, some say the problem is not the fact that the Korean won is appreciating, but the fact that the rate at which it is appreciating, as you mentioned. And if you can see a graph here, earlier in the year, the won was trading at about 1,071 against the greenback, as we mentioned, but now it's hovering around 1,021, and it's quite the same situation against the Japanese yen as well. And Ambassador Kwon, you had a few things that you wanted to mention about the rate at which the won is strengthening.
As I told you, Korea won is overly appreciated in 6 years at this time, and the speed compared with 2 years ago, June 2012, Korea won appreciated against the dollar 16%, whilst against the yen 52%. The speed cannot be observed by our SMEs mainly. So the speed, we are worrying about the speed. And that is the reason why government should do some smoothing operation. So even in G20 summit meeting in Paris 2011, after they see the problems of over-issuing of currencies of USA and Japan and Europe, it makes a lot of turmoil in the emerging market, capital market. So they advised that government should use some careful measures to prevent too much fluctuation.
You'd expect the economy to be booming right now with the World Cup starting and summer vacation season fast approaching. But that couldn't be further from the truth.
올 4월까지 계속 그 36년
The economy had been very active up until April, but since the Seoul ferry disaster, a lot of events have been canceled, and we have been faced with an economic downturn.
경기 하락 국면에 좀 접어든 게 아닌가 그렇게 좀 판단을 하고 있습니다.
The entire world has been grieving for the victims of April's Seoul ferry disaster. According to a report released by the Korea Development Institute, the Seoul ferry disaster has had a negative impact on public consumption. The report released by the Ministry of Strategy and Finance on June 10th says public consumption and the service sector have been hit with an economic recession because of the ferry disaster. We visited a tourist agency that has been greatly affected by the slowdown in consumption. The leisure and culture sectors have suffered the most.
세월호 사건 이후에 그날 당일부터
I got one cancellation call on the day of the Seoul ferry accident, and since then, calls to cancel or delay reservations have continued to come in. I'm not sure when things will get back to normal.
다시 시작할지는 저는 아직은 알 수 없습니다.
현재까지 4월달 5월달
About 2,400 people have canceled reservations over the last 2 months, and the estimated damage is about $2.5 million. The company has been seriously damaged. I sold my apartment and 2 buses. I think it will be difficult to maintain our business after August.
The Seoul ferry disaster has cast a long shadow on the Korean economy. There has been an urgent call for measures to tackle the crisis facing the nation.
The negative impact of a Seoul ferry disaster on Korean economy is a determining factor in establishing the economy policy for the second half of this year.
Do you, Ambassador Kwon, do you think the Seoul ferry disaster has had an impact on the Korean economy?
Yeah, absolutely, absolutely. Because this is the saddest accident in our long history. And then it gives a lot of impact not only to Korean people's emotion, but also in real economy. The retail sales has gone down from first quarter plus 0.4%, but just in April, only 1 month, minus 1.7%. And service industry product also minus 2%. And to make things worse is small and poor people, the restaurants and the large bus drivers. So those areas, compared with March, April went down to 3.2% minus.
So small business owners and perhaps part-time
so
workers.
it gives, I guess, the biggest negative impact in our economy. Because as I told you, because of aging society, marginal propensity to consume has gone down, and they want to deleverage big housing debt. Therefore, consumption recovery is very slow. But to make things worse, Seoul incident make it worse.
I mean, we actually have an interesting piece of information here. Foreign and domestic economic institutions seem to have opposite analyses on the outlook for the Korean economy for the latter half of this year, and also the impact of the ferry disaster that it had. Now, overseas agencies pictured rosier outlook, whereas domestic agencies had a little bit more of a negative outlook for that. Do you think that has, what do you think of those observations?
You know, I think the Korean people have had a very profound shock from this ferry disaster. Not just the ferry disaster itself and the immediate consequences of it, but I think they lost a lot of faith in the functioning of their public services. And that's going to take some real work to restore confidence, to restore credibility. I asked somebody the other day if they would take a ferry ride from the mainland to Jeju-do, because that way that way the car could travel with us, and there was an immediate sort of shock reaction. No, and it's not, I think, directly the loss of all those lives, but it's the lack of confidence in the infrastructure of the country. So if you're sitting far away in another country, you don't pick up on that, the profoundness of that emotional reaction and the way that it really is affecting people. So I think the foreign observers are probably not integrating some of those emotional factors. However, it's also fair to say that Korea has always been an emotional country, and our emotions don't last forever. We will restore in one way or another our confidence, our energy, our activity, because that's the kind of people that we are. And I think by the end of the year, the economic effect of the Sewol-ho ferry disaster will have passed, even though the social effect will still take time to resolve. So I think the right answer is probably somewhere between the two views. It won't be as bad as the domestic observers think, and it won't be as good as the foreign observers think. But again, to me, those things are still temporary. I prefer to see something more fundamental happen for the Korean economy, which we did see back in 1998 and 1999. I personally was involved, and I think Minister Kwon Tae-shin was exposed to it as well, with the 1 Million Jobs project that was basically about getting Korean people back to work after the IMF crisis. And it was about deliberalizing the economy, deregulating the economy, creating entrepreneurs, giving people the spirit that they can take charge of their own destiny in productive ways. And I think along with education, it's restoring that spirit of can-do, but not having to wait for a chaebol or a corporate entity to do it for you, to realize that you can do a lot of things for yourself, especially in today's world where anybody can write apps for the iPhones and anybody can start up a new messaging service.
Well, then, Ambassador Kwon, how should we boost consumers' the mind sentiment to buy, to spend money? And the second, what should we do to activate the domestic market?
All these issues can be solved only by one measures, to induce more private companies invest more. That means we should make Korea a better place to do business, not only for Korean businessmen, but also foreign businessmen. That is deregulation, and then making labor market more flexible.
Mr.
Let me add a couple of comments for you. First of all, the future of Korea's economy is not going to be from further growth in its manufacturing sector. If the manufacturing sector maintains its current proportion of the Korean economy, we'll be doing extremely well. And by the way, I travel around the world quite a lot these days, and any country in the world would be thrilled to have economic growth in the range of 3 to 4%, like Korea is having. So we're not underperforming globally. We're only underperforming our own ambition, but I also believe we're underperforming our own potential. And part of that potential is the fact that we happen to be sitting next to the second largest economy in the world, which is growing at 7.5% per annum. And you only have to ride that like a little ballerina on an elephant, right, to be able to grow at the same rate as China. We're not capturing enough of China's growth rate, even though we're the little sister right next door. So one of the initiatives that Korea needs to pursue continuously and more aggressively is engaging our economy with China's economy in more and more productive ways. That's happening, but it needs to happen more. It's our great opportunity.
Right, at this point, let's turn to Mr. Evan Ramstad. He's the Distinguished Senior Associate at the Center for Strategic and International Studies. Mr. Ramstad, you've compared the impact of the Sewol-ho ferry disaster on the Korean economy to that of the 9/11 attack in the U.S. Could you elaborate a little bit more about your report?
Well, I wrote that article about 2 weeks or so after the ferry accident, and I was writing for mostly an audience here in the United States that mainly follows South Korea and North Korea's political and geopolitical issues. What I was pointing out was that this accident was starting to have an effect on the Korean economy. And to relate that to this American audience, I compared it to what we saw here in the United States in the weeks and months after the 9/11 attacks in 2001. Of course, in the United States, we were in a much more fragile economic condition at the time of that attack. We were already on the verge of a recession here, and that attack tipped us into a full-blown recession. South Korea is not quite in desperate economic shape like that, but it was striking to see how much that incident was starting to have a slowing effect on the economy, particularly in the consumption area.
But some foreign financial institutions have shown a positive outlook for the Korean economy, saying that the disaster might not have a serious impact. What's your take on this?
Well, I think they're probably right. The reason is that consumption is a very small part of the Korean economy, especially if you compare it to what it is here in the United States, where it's almost 70% of the economy. In Korea, it's the reverse, where you have manufacturing exports accounting for about 60% of the economy, and consumption is a much smaller portion. So if consumption goes down in South Korea, it has less of an effect on the overall economy than what we see here in the United States. And while you did have some slowdown of exports last month, for instance, most of that was attributed to the fact that you had 2.5 less working days last month than you did a year ago, which made the comparisons much more difficult. And generally, the South Korean economy looks to be fairly sound right now.
So where to from now on? What will happen now?
Well, the South Korean government in the past, when it's been confronted with a prospect of a slowdown or anything, they will often turn to government stimulus measures. And of course, that could happen in this instance. But mainly, probably what could happen is just for the slow, gradual healing of the hurt that has happened in South Korea, and for people then to start consuming more normally than they have been. And, that will be a kind of a slow process. We keep seeing indications of people having changed behavior because of the incident and wanting to be respectful for the victims and the victims' families. So, but once that sort of period of anguish and mourning ends, then people will probably go back to some of the consumer spending and some of the travel taking and trips and vacations and spending on luxury goods and things like that will give a lift to the consumption part of the Korean economy.
Okay, thank you very much for your time today. That was Mr. Evan Remstead from the CSIS, also a long-time Seoul-based reporter for the Wall Street Journal.
Ambassador Kwon, what are your opinions on President Park's 3-year economic innovation plan?
I think that is a very good policy plan. The content would be boosting domestic consumption or domestic demand by increasing investment and consumption, and also the deregulation issues, right. Regulation reform, and improving labor productivity. Those issues are very important issue. But the problem, many cases government say government plan, but there is no real implementation issues. As James pointed out, if I go back forward, that we cannot compete with China in the traditional manufacturing industry because their wage is so low and there is no democracy. Government can control it much more efficient than Korea. Then we should differentiate our economy with that of China, which China cannot do it well. That is using very brilliant, intelligent young people's workforce, the area of service industry, education, medical service, tourism, sightseeing, and then softwares. But in every area, there is a bottleneck and then hurdles coming from the vested interest group. Like screen quota, which I argued in 2003 and 2006. Many famous movie stars, they cut their hairs bald and then protest Gwanghwamun Street for 100 days. Those days, the issue was reducing the legal limit of Korean cinemas to run Korean movies. 100 from 145 days to 75 days. But now after that, our movies becoming much better. But they are blocked it for many, many years. We see that kind of thing in every area. Education, look at Singapore. They invited the world famous management business school. Now, students from China, Vietnam, they all go to Singapore. We tried to do it in Songdo, but we didn't succeed. And medical service. In Thailand, they have 2 million people, foreign patients. And then Singapore, they invited Johns Hopkins and some famous worldwide hospitals. By bringing them much later started than us, but they already have 1 million people patient. But in Korea, because of the egalitarian issue, if we bring in foreign medical services, only rich people can afford it. The poor people cannot afford it. So that is a kind of disequilibrium in society.
So you think the
government...
that
is hurdles. We need to overcome all those issues to make service industry competitive, and then make Korea the industry differentiated with that of China.
I actually have a lot of confidence that President Park and her DNA think very similarly to the discussion that we've had today. I'm sure she believes in education. I'm sure she believes in the service sector. I'm sure she believes in the government playing a key role to lead the economy, because it was government leading the economy in the 1960s, the 1970s, and the 1980s that got Korea to where it is at today. There is one problem with introducing democracy, okay, which is that you can only please 50% of the people 50% of the time, right? Which is not a very high outcome. 25% is the product of those two. We need to remember that Korea does best when it is led from the government, but it's not enough to have plans. Whether Kerry is making the plans, or KDI is making the plans, or the Blue House is making the plans need to be implemented. And we have a lot of social and cultural and political resistance sometimes to these plans that are necessary for the health of the country. And it's very frustrating to see good plans go awry. I hope that won't happen with President Park's plans, because we need those kinds of leadership, and we need these kinds of economic innovation to be happening in this society.
All right, so on that note, this is going to be the last question of the day. What kind of direction do you think the Korean government should take on its economic policies for the second half of this year then?
I prefer that Minister Kwon answer that.
Is there a reason for? All right, so Ambassador Kwon, go first.
We need to handle these short-term issues for the second half of the year. As I told you, they should maintain 3-year economic reform plan, and then they are boosting investment and consumption using fiscal and monetary policy, and then deregulation issues. But it should be implemented. In addition to that, to solve all these issues, the main sources of investment and consumption comes from business. So we should make Korea a good place to do business. To do that, we should do a lot of the deregulation issues, because these days, to prevent congestion in the metropolitan area, a lot of restrictions. And then we don't want to see big conglomerates. So there are a lot of regulatory things not to let big corporations invest. And also labor issues, extension of normal wage issue, and then the reduction of working hours, and then extension of retirement age. All those issues make Korea not a good place to do business.
All right, so many issues that we need to solve and focus on for the second half of this year. Now it's your time to answer
It's become too complicated to do
right.
business in Korea, whether you're Korean or foreign. We need to simplify it. We need to streamline it. I think we did that back in 1998 after the IMF crisis, and the results were outstanding. 2.5 million jobs were created between 1998 and 2003. If we remember what it takes to create jobs, that should be the focus for the government's policy. Everything else is simply the mechanisms to get there. And the Korean people want to work, they like to work, and when they work, they will get out there and spend their money because they'll feel they've earned it. Let's remember those factors for resolving the domestic economy, although I think the biggest factor in a recovery in domestic economy will actually come from foreign visitors visiting Korea as tourists and enjoying what they find here.
All right, well, thank you very much for being on the show and having this stimulating conversation today. We do appreciate it.
Thank you very much.
And that wraps up this edition of Upfront.
Thank you for watching. We'll see you next time.